All right, we are back for the morning check-in. And as always, looking forward to connecting, man. I apologize for the technical difficulties, but that's what happens in the world of software. But and speaking of, glitches, did you guys know that 1.7 million people's credit card information was compromised just recently? But that didn't get talked about much in mainstream news. 1.7 million. So one of the stories we're going to talk about today. But as always, welcome. My name is Mike, the host of the Morning Check-In, and I try to just skim through the news, find out things that's relevant and most important to us as consumers, as investors, as Americans, you name it, and deliver it to you in a very concise and, I guess, well thought out, analytical format. And give you guys something to chew on and think about throughout the day. And of course, try to utilize this information to just make maneuvers with it. That's all. And so, as always, looking forward to connecting. As always, I have 10, 12 headlines that I think might be important to you. So I'm going to do my best to try to skim through them, give you the nuts and bolts of them, and just paint a picture as to how things are really unfolding, globally for that matter. And but as of right now, the rate cut cycle has commenced. And so it's not because of the overall health or the central banks accomplishing their goals of taming inflation, just because it's not about inflation, because inflation is neat and necessary in order for the monetary debt bubbles as well as the asset growth to continue to move forward through the creation of currency, i.e. through debt. But as a current moment, with them attempting to actually cut rates at a time where inflation is not really tamed, only equals more and greater concerns of the consumer prices in the future, because once again, it's baked into the cake. And there's 315 trillion reasons why, they're concerned with the air seeping out of the bubble or the bubble bursting. That will be the reason why they're pivoting too soon. And as a result of that, it's going to be more problems in the future. They can't escape this. It's baked into the cake. But my goal is just to show you guys what's happening, because they'll never tell you these things. And of course, mainstream media would rather focus on the 10 questions that just took place during the debate that was pre-scripted, and everybody kind of knew the talking points that the powers that be want us to focus on. But they'll never talk about what is probably most important, or one of many important things, and has to do with my purchasing power of our currency. And so that's what, I guess, rethinking the dollar, rethinking the euro, rethinking the peso, rethinking the rand, rethinking whatever currency you want to put behind that. That's what this is all about. So welcome to live stream, people. Let me know in the chat if everything is flowing smoothly. Let me know if the audio is going well, so that I'm not just talking to myself. And I will do my best to try to, give you some news, give you some things to chew on, and keep your day moving. Hopefully everyone's off to a good start, and should be fun, man. But let me just jump right in, man. As always, I want to make sure I continue to encourage, remind the viewers on the resources and opportunities that I've been afforded as a part of this monetary journey I'm on. And I want to remind everybody, if you haven't, to continue to do the best you can with what you have, to stretch it out as far as you can. Meaning that you don't have to be a uber wealthy individual to protect and preserve the little bit of crumbs that you may have. So whether you're high net worth or no net worth, you can still be a part of a 1% of the world by understanding what's going on, having a great or high monetary IQ, and then also strategically position yourself right now in this day and time into assets that are underperforming or underappreciated, and taking a small position in a lot of things that are underpriced compared to where they're going to go once this 315 trillion is doubled in the next couple of years, perhaps, to keep these asset bubbles inflated. You can be on the winning side of that, or you won't be a casualty of that, as I mentioned in the video I did earlier. But okay, so with that being the case, let's dive right in, man. Let's dive right in. Let me get myself situated here. So on the screen here, as you guys can see, I want to continue to remind people of the opportunities of taking possession of your retirement portfolio in a self-directed IRA. And so as you can see above my head here, colonialsmetalsgroup.com/RTD has partnered with me to present this information to you, to give you a chance to speak with the experts, to get your questions answered on how to take gold and silver and put it either in your physical possession, in a vault, in a close proximity to you or your dwelling, so they can help you with that, or you can have it put into the depository nearby, somewhere in a state bordering you, where you can have access to it. And so once again, when the markets come crashing down, you won't be a complete victim of what will inevitably happen. It's happened every single boom and bust cycle. But then again, the Fed manages always to reinflate it. And people think that because the numbers on their screen, it goes up. That means they're uber wealthy as well. But it's relative to the purchasing power of your currency. And so what we're experiencing now, in my opinion, is a pending currency crisis. And I'm going to show you a little bit as to why that is when you compare the Federal Reserve note that's underperforming to gold right now. And wait till silver catches up. It's going to be it's going to be interesting. But anyway, if you guys are interested, links in the description. Check them out and just tell them Mike sent you. Ask questions and find out if it's something for you. And so once again, this opportunity is only for 2, 5, 6% of the population because over 50% don't really have any investments in the equities markets. So they have nothing to lose in the first place. But for those who do, this could be a viable option for you. So just something to be aware of for those who are interested. Okay, I want to look right now. Let me just jump right in, man. And so just look at some numbers real quick. Let me refresh my screen here. And I want to take a look at this price action in the metals, man. This is, once again, this to me is an indication of what is not happening in fiat currencies. Let me get this out the way here so it's not in the way. But as of right now, gold, 25.53 at 11.32, according to what's here on the screen. And silver, 29.61. Those are the true anchors of monetary preservation, monetary wealth, monetary history, whatever you want to call it. And so these four metals in total, silver, platinum, palladium, gold, to me are the four monetary constants that everybody here, of course, you have exposure. If you're watching this channel, you have exposure in those industries there. And so those four, to me, are the primary mediums of wealth preservation, insurance, and you name it, against your fiat currency and protection against your government as well. And so once you have secured a good enough position where you're part of that 1% of people, because 99.99% don't have any of this, they don't know what gold or silver is, you'll be in a much better position. And then if you want to grow these actual mediums of exchange in physical form, then that's when you get into alternatives such as speculative investments. You have a variety of sectors. I'm not going to talk about much, but I've mentioned it before. Some of the mining space will be good opportunities. You have the crypto space. You have some other things that could be viable options. Everybody got their own strategies, but keeping an eye on these numbers is just a reminder, an indicator of where we're at, because these prices here are small compared to where they will go as a result of the pending QE that's underway right now with these cuts. So let's get into it. Yesterday I noticed that the markets were very in the morning. I shared on Telegram. I was going to try to do a video. I was going to entitle it 50 Shades of Red, based upon the S&P 500, and just how I was looking at the screen. It was so much dark red, light red, pink red. I'm like, it's not a good day for those markets there. But of course, they managed to recoup some of that. But just right now, as I'm thumbing through here, let me just refresh my screen here. When it comes to the speculative space here we got the crypto bubbles, and it's still a lot of red out here. But even if let me just try to zoom out some and give you something. So as of right now, Bitcoin, the head honcho is 57. I see so many people are just the public relations departments for the Bitcoin maximalists is just out right now trying their best to make sure that they continue to remind people that, hey, Bitcoin is still going to $100,000. It's still going to $1 million. And then Michael Saylor gets front page access to the mainstream news on CNBC, Fox. They bring him on to hype up the bubble. And so once again, speculative asset based upon the fact the powers that be want this industry to succeed in order for them to have a digital transformation, i.e. great reset. It's going to reach numbers that we probably could never imagine. So that's just, I believe, a fact. I can't ignore that. But then again, how will it end up? We'll see. All right, so what's happening right now? Let's go. This is the S&P 500 right now. And so as of now, financials are down looks like 0.15%. And just to give you an idea what's going on here, a lot of red, a lot of green. All sectors are, it's 50-50 right now. So not too much panic and pandemonium out there. So I guess that's a good thing. But what is most important happens to be these figures that we're given right here. Let me just jump into it. Inflation falls to a 3-year low as Fed prepares to cut interest rates next week. So they've already done enough Fed speech, front running the coming the pending cut. And more than likely it's going to be a quarter, just because the ECB did a quarter. And then last cycle, Canada did a quarter. So a quarter rate cut seems to be the going amongst the G7 nations for the most part. And so they have nowhere near tamed the beast. And when I mean the beast, it says prices rose 2.5% in the 12 months ending in August, down from 2.9 in July, while falling gasoline prices, a large part of the decline, according to the latest figures from the Labor Bureau Statistics. But once again, we've been given all these statistics as of late, and everybody knows that these statistics are manipulated for the sake of the people who stand to lose the most. And so here, housing costs made up more than 70% year over year, and it's went up. So point in case is 2.0 is their official mandated target, and 2.9 is not necessarily 2.5. It's not necessarily 2.0. And so once again, they're going to cut too soon because it needs to be higher, even higher than what it is now, for a longer period of time if inflation, i.e. CPI, was a concern. But just the fact it's above zero lets us know that that's all baked into the cake in reference to expanding the monetary base. And so the reason they're cutting, in my opinion, has everything to do with this visual aid right here. And so this is from the Visual Capitalist. And so as you can see on the screen here, global debt by sector Q1 of 2024 is $315.1 trillion and counting. And this is just debt. And the fact that this is $315 trillion denominated in the Federal Reserve note, aka the world reserve currency. And so if every nation around the world is dependent upon U.S. debt, the Federal Reserve is in a very precarious position to make sure that they pivot last and do everything last, because everything is centered around this instrument right here, the Federal Reserve note. And so just look at this. Government debt, $63.0 trillion. Total government debt increased by 2.6% year over year, with the world's government sector having the largest annual increase. So the world government's largest annual increase is what they consider to be growth, economic growth, GDP. Government debt is growth. And so clearly they're not having enough of that, because if they are having enough growth, then they would need to cut right now, given that they haven't even gotten down to 2% CPI figures. Household, 39.9. We have set world records, historical records in credit card debt. You name a debt, they've already built a product off of it. Buy now, pay later. Yeah, it's there. Non-financial corporates is $50 trillion, 24%. Financial sector, 56%. Emerging markets, the African nations, the underdeveloped nations, whatever you want to call them, 105.4 trillion, all denominated in USD. And so they have strangled the world in USD debt. And that's why they can't have high rates for too long, because it's hard to service debts when the interest on that debt continues to, I guess, automatically, in a sense, it's deflationary, because as the debt is not paid off, there's defaults, and defaults on loans is deflationary in nature. And what we're witnessing, a good example of that, is the commercial real estate. You have skyscrapers going for technically pennies on the dollar. $100 million loan 4 or 5 years ago being sold for, $8 million. That's like what, a 90-something% haircut. And so you have a lot of that happening in every major city around this country. That's deflationary. That's a problem. And so the world requires cheap, if not negative, borrowing costs. We have to in order to even prolong this for several years, we need to go ZERP, because we've been near NERP, negative interest rates, forever, but adjusted for real rates, they already been somewhat negative for the consumer and the saver. We've been losing out no matter what. But the banking sector needs to go negative. meaning that they need to pay us to take out debt. So if you take out a mortgage, they will literally put currency into your pocket or incentivize you with grants and rebuilding homeowners come up with new schemes like homeowner renovation loans, and we'll give you, you take out a $300,000 mortgage, we'll give you $100,000 to rebuild your house and to refurbish it, zero cost. Actually, it's free. That's how bad things are right now. So I say all that to get to these. ECB is leading the way because it was the second most used currency. Gold surpassed it this summer. ECB cuts rates as growth. Remember I said growth is subject to government indebtedness. Because government indebtedness has somewhat slowed down, it's hindering things. And so ECB cuts rates. And so the European Central Bank cut its interest rates on Thursday, saying lower inflation and economic growth were allowing it to take its foot off the brake slightly. So they're taking their foot off the brake from trying to bring everything to a halt, i.e. taming inflation. And so now they need to put their foot on the gas in order to keep this bubble, the debt bubble, inflated. So once again, these are just things that people should be aware of, because you guys get it, but the average person don't get the fact that the debt that they are bringing into existence, it is the currency in of itself. They're going to create by lowering rates, incentivized borrowing. Incentivized borrow means there's more malinvestment, more risk being taken on by the private sector and the government, and they take those debt instruments, those bonds, deposit into the banking structure. The banking structure then creates currency. They send the currency to where they got to go, and therefore more currency leaves the banks into the private sector, into people's pockets, into people's stores, and voila, continuous loop. And so literally they need to put their foot on the gas so that they can blow this bubble back up a little bit so that it gives that wealth effect. So before I got interrupted, somebody in the chat asked, when will this bubble come? But when will the bubble burst? And after thinking about all this, I'm like, they can't afford to let the air seep out, and the only way they can keep this thing going is to continue to slowly but surely reinflate it even bigger, and that in of itself is a debt default, because they're defaulting on the people who hold the currencies, meaning that you will get less and less purchasing power over time, and so that is how they're going to get themselves out of this, barring some type of event. Now, as I mentioned earlier on, the war drums are beating. So right now, at the same time we're going through this political upheaval within our country, they've already flooded the country with 20 to 30 million extra people who eating dogs, cats, or whatever. I did a video. Also, I'm about to release it on what's happening in Springfield, Ohio. Stuff I found out, man, just make you really wonder. But if you put pockets of extremists, because they're not from here, their thought process is completely different than ours. Some of them are not even civilized in the sense that they have a moral compass to gauge their activities in society where they came from. That's why they were running, because of their destruction of their own countries. So they're going to bring that same impoverished, destructive mindset to this country here. And we're already been contaminated. We've contaminated ourselves for the last several years with radical ideologies. In particular, I can give you a lot of radical ideologies that doesn't get talked about much. But if you say certain things, you might be in trouble. We have wokeism that's gone crazy. I just shared a video on on Telegram about Camala Harris during one of her previous speeches, talking about the right for people to have access to health care, to confirm their wholeness and their identity through transformations. And okay. Get the people what they want. They want Sodom and Gomorrah. Give them what they want. We know how that ended. Okay, I'm getting carried away. Forgive me. I'm getting carried away. And bring it down some. Take a drink. I gotta take a little sip. Hold on. Okay. Woosah. Side note. Let me share something with you real quick. I was thinking about doing a video. This is a while ago, and I downloaded a audio meme, and I was going to always play it when I talk about stuff that just doesn't make sense. But this is what the people want. Like this is the way society's heading, and we were told that. We were told that right here. We were told this. You go back here, you see how all this unravels. You see, we know that. It's just amazing that people, we all got the same access to the same book and same information, but people don't see it that way. Anyway, but here's what I was going to play when I get to something crazy.
Are you not entertained? Are you not entertained? Is this not why you are here?
So yeah, Mr. Maximus. Okay. I'm gonna be honest. Okay, let me get back to the main subject at hand. Okay, cutting rates. The debt is too important to the system to let it deflate or burst. So they're going to do more radicalness, cutting rates. But the U.S. and China, and U.S. and Europe aren't the only ones. Canada did it. You name a country, they got to cut. They all tighten because of the flooding the world with currency. Now they got to try to reel some of that back in, but it's not going to work. So they're going to have to put their foot on the gas and create more currency. So in order to even maintain or even appear to try to service this debt, 315 trillion globally in USD terms, you're going to have to continue to expand that amount of currency just to meet the interest payments on the debt that's already out. And they can get away with this. If they were able to get it to 315, that means that they can more than likely get it to 500 trillion. And that's why the world, including the BRICS, I got an article here, is running to gold. That's why gold is at an all-time high in all fiat currencies, because they know that. And they know that they have enough time, as long as the people got confidence in the currencies, to be able to try to pull these maneuvers off. And so within that window of time, as long as the 99.99% of the world population don't know that it's the currency that is their greatest enemy, between, or the contract between the government and the central bank, which is the currency ultimately, then this can go on for quite some time. That's why you still have some time, barring some type of event. So just for that question that I was attempting to answer earlier. And as always, for those that are plugged in, feel free to throw out some thoughts, ideas, suggestions in the chat. I see you guys out there. Rolf says democracy is the theory that the common people know what they want and deserve to get it good and hard. Okay, I'm not familiar with that quote. But yeah, most people don't know their history or the fact that we, the people, are supposed to be the overlords of the government, not the other way around in a republic. But once again, okay. Forgive me. I'm just ranting too much. Bear with me, people. I have more to share. But what I wanted to, real quick here, on just the word cutting, just, the fact that everybody needs to cut. Everybody's cutting. China to cut rates on 5 trillion mortgages as soon as September. So we all know right now things aren't the greatest in China from what we're being told. Once again, I haven't been there to validate that, but what we're being told, things are not the greatest. Okay, so China looking to cut rates on their real estate bubble there, because real estate has been proven to be the most viable option for savings for the Chinese people, and they're having problems with that. So they got to cut rates to support the economy, while also trying to re-incentivize people to make sure they don't pull their funds out when they are able to. And so it says China's poised to cut interest rates on more than 5 trillion of outstanding mortgages as early as this month, according to people familiar with the matter. It says some banks are making final preparations to get ready for the upcoming adjustments on mortgage rates, said the people, asking not to be identified, whatever. Some homeowners may enjoy up to 50 basis points of immediate rate reduction, one of them said. So imagine them looking to utilize around $5 trillion worth of support for the mortgage industry by going out into the economy. Every mortgage holder, they're going to cut the interest rates on their current mortgage so that their current costs decreases a little bit. So whatever the rates are in China, they're talking about dropping it 50 basis points. So say, for example, if it's six and a half, now it's going to be 6. So that frees up maybe an extra $50, $100, or 100 yuan, or 1,000 yuan, or whatever the conversion rate would be in proportion to that half a point of cut. So that's a way of prolonging things in China. And so if it's done in China as an emergency drastic measure, it's good to say that it can be done here in the U.S. as well, perhaps. So whatever your mortgage rate now, give or take, there's another, residential real estate issue as a result of the commercial real estate, expect some type of maneuver. They're gonna do the best they can to maneuver things around. And mind you, this is an experiment in real time. We happen to be the pawns on a chessboard, but once again, okay, that's just one thing there. Okay. What else we got here? And so as a result of all this cutting here in the US, this is what people don't really consider. Here we have the Consumer Price Index, or the CPI index, for all urban consumers, all items in the US city average. So behind me, as you can see, this thing is already at extremes. If you zoom out and see throughout history where things have gone. And of course, everybody knows that right around here, let me get out of the way. Right around, let me just move it. Right around here, everybody who knows what happened around here. And you see, whatever that event was that happened around here is the reason why they were able to just off to the moon. Everybody knows what that is. Okay, I'm not going to mention it. But, so if you just even zoom in a little bit to more recent times, here we have from 2014. Let me get out the way. 2014 onward, CPI rises. It takes a dip, a little deflationary. The air seeps out the bubble a little bit. That's a problem. That's a problem. Can't keep the debt war Ponzi going. Air seeps out the bubble. Okay, boom. What you do? You just reinflate it by lowering interest rates. Or you start hiking a little bit. Okay, we have a problem. Interest rates too high. When Jerome Powell started to hike right here, we see what happened. We had a little health situation. How timely was that health situation? At the same time that things were starting to become problematic in the repo market. Okay, no problem. It drops down, but boom, look at this. From the April 20th bottom-ish to where we at now, 314. Mind you, on this scale here, it only goes up to 320. But if you zoom out back to 1950, it was at 21. 21 was the percentile of how they averaged all this stuff out here, this basket of all city averages. And so from 21 in 1947, under a standard, we had a standard. Gold and silver was handcuffs. They took off the handcuffs. Boom, here we are today. So my point is, this is a part of the reason why they need to cut rates. So even though we've been in a tight environment since 22, when they first started tightening, overall averages have continued to climb as if this little hump here, this abnormal hump, this was a stimulus package. This was whatever the last stimmy checks came out. That's why it surged so much. Hitting the open market, making a difference. It's leveled off a little bit. And then here we are now. Bam. And it's cooled off a little bit in April, but it's turning the corner. And let me just zoom in a little bit more. And it's this turning the corner to where we're at right now. So from April to right now today, this is about to go shoom. It's about to go take off like a rocket because they're putting their foot on the gas. They're cutting on the spigot. Each quarter point is cutting on the spigot, cutting on the spigot, cutting on the spigot, cutting on the spigot to where they're going to turn that damn thing. It's just okay. You get my drift. That's monetary policy in layman's terms, because I'm not a PhD. I'm thinking I could be 100% wrong, but these graphs, these charts, these numbers, they tend not to lie. Okay. And just give you some stats and some facts on the figures here from 𝗙𝗢𝗟𝗟𝗢𝗪 letter. While CPI inflation is 2.5%, inflation is much higher in the many basic necessities. Car insurance up 16.5%, transportation 7.9%, hospital services 5.8%, homeowner inflation 5.4%, rent inflation 5.0%, car repair inflation 4.1%, food away from home inflation 4%, electricity 3.9%. While the rate of inflation is at a 3-year low, according to them, prices are still rising. Meanwhile, more than half Americans currently believe we are in a recession. Consumers are still struggling. So, and then you factor in the US dollar has lost 25% of its purchasing power since the pandemic. It don't take a PhD to realize that, it's hard to hide this type of information. And so If you've lost, so think about this. For people who are not awake and aware and actually proactively involved in things that benefits them today, while things are still somewhat normal, imagine when stuff hits the fan. Because whenever the monetary system or systems break or bubble burst or whatever happens in the future from a monetary standpoint, it's going to impact everybody's financial life. And at that point, it's going to lead to civil unrest. So monetary, domestic economy on the streets. And like I mentioned when I first started off, when you got 20 million people in this country that never had anything in the first place, they're going to be vying for the same amount of nothingness that the people who thought they had something are also trying to reclaim. It's going to be a clash. Okay. So that's just my 2 cents. Okay, what else I got here? Let me just give you a couple more things here. Like, this is not meant to be doom and gloomish. This is just, what's happening. This is, I think putting it all together. And, what really, I mentioned this on the in Telegram yesterday, but as a result of all this debate, yesterday, 9/11, Camala Harris and Donald Trump shake hands at 9/11 ceremony in New York. And I was sitting there watching this, and look, Camala Harris, she's smiling. I mean, they have no cares in the world because they're in on this reset. Everybody on that screen knows what's happening, what's at stake, and they know the timing of every single event that they are being told to work towards. And so it's just amazing. Like, and then somebody in the chat or in Telegram was like, Mike, I usually agree with you, but, today, man, a lot of lives was lost. You know what I'm saying? We need to, I'm like, okay. I'm like, I lost a friend in the building. Like, so I know, the concept of loss, a lot of people was lost, a lot of lives lost. It happens globally all the time. But from their standpoint, they're meaning the powers that be, those are just casualties of monetary war that they can afford to, those are lives they can afford to lose given their greater agenda. Because as a result of this event, we got the Patriot Act. And here we are now, 23 years later, I'm still walking through TSA. And ain't no terrorists actively doing anything wrong. And on top of that, you could just walk through the border. So the terrorists are already here. So why are we still getting scanned? Whatever. Don't make sense. But I don't expect it to make sense. Okay. That's just one thing there. Okay. And then coming on the home stretch, I got around to cut some articles out. Yeah. Okay. But just as a reminder that I know that we know that that the BRICS confirms 159 participants will adopt new global payment system, isolating the U.S. dollar. This is according to Hal Turner Radio. And so once again, I don't think it's 159 participants will actually be accepted. But once again, the fact that there are alternatives being worked out in real time should concern a couple people, because that alternative means that there'll be less of a need for this thing here. And then, yeah, okay. A lot of broken promises. All right. And then I'll make this the last one. Make it a good one. Let me make it a good one. Okay. So I did I got you two more. I'll give you two more. So this is something I deem as being good as well. It's because it should be a concern. Massive credit card breach hits 1.7 million people after hackers access payment processing service. How to find out if you were affected. So this is something I didn't see on the news. I just happened to be scanning the airways like I typically do, and I saw this. So it says U.S. and Canada may have had their data exposed and massive debit card breach. So once again, your information could be out there. And so if you get some calls, you get some mail, or you get, whatever, whatever, don't be surprised. That's just how the process goes. So, all right. That is the bulk of the news for today. I just, the quick takes. I really enjoy being able to sit down and just, share thoughts without getting sidetracked. Man, I get sidetracked so much. And that's why I do more of the quick takes rather than doing the live streams, because I can't stay focused on one topic. Too much stuff comes to mind. I got to rant. Okay, but here's another interesting story. Oh, wrong one. Give me a second. Here we go. All right. Samsung to reportedly slash global workforce by up to 30% in certain divisions amid intense competition from Apple and Huawei. So more layoffs. And then the next one, and this will be the last one, because this is just more about things you won't hear on the mainstream media in the way that you'll hear it here. Here, this says, PricewaterhouseCoopers laying off 1,800 employees as it plans restructuring. And then also yesterday, Stellantis here in Michigan decided to cut thousands of jobs a couple weeks ago, but they just dropped $406 million into electric vehicles. At the same time, people aren't really interested in electric vehicles. So, yeah, man. Below the mic, appreciate you, man. Says great content over in Rumble. So this is what's happening, man. Just some things to be aware of. So as always, if you know what's happening around you, it gives you time. It gives you one heads up to be able to just give you something to prey on first and foremost. Like, if you know the enemy is trying to steal, kill, and destroy everything around you, it gives you something to put in the guy's hands and say, hey, I need help here. My finances, my family, my friends, our country, our president, Lord, here, take this. Let your will be done on earth as it is in heaven. That's what the mankind needs right now. We need a government revival, but it's only going to come when the Messiah comes back. So be of good cheer, good people. Share your faith. Make sure you always mention how God has intervened in your life and has done wonderful things to you. If you're tuned in right now, you've been blessed. You've been blessed. And first and foremost, you've been given wisdom to be able to see beyond the lies that the enemy has put over in front of people's eyes. So that's another reason to be blessed, to be grateful. So, all right, good people. Yeah, keep it going, man. As always, for those who might have come in or whatever, resources down below. And this is where, what excites me is to do more. This is where I've been at lately. This is how I've been live streaming as much because I'm trying to figure out, I need more actionable steps. Like, I'm tired of talking because I can get carried away with this. But actually helping people is where I'm at now. So working on things on my end and try to put resources in people's hands, win some souls for the kingdom. I just want to do more stuff that just matters. Like, at the end of the day, these videos just information. They don't change lives the way that I know that I'm capable of doing. So that's kind of where I'm at now, man. But anyway, for those who are interested, resources down below, the silver team. I'm really going to focus on that because that's a way to get involved with the very same thing I talk about in a business structure. So I'm looking forward to, continue to build a team. And so if you're not on a team, get on a team, get your silver, automate it, help other people, get paid in currency, reinvest it. That's just a strategy. But